If you have been trading for months, maybe even years, and you still feel like you're missing something, it is not your fault. The problem isn't your strategy, it is your structure. Most traders are reacting to noise, chasing every candle, and wondering why the market feels random. But the market is not random, it is engineered to manipulate emotion and reward patience. Today, I'm going to show you something that finally makes it make sense. A three-step model that cuts through all the noise, every fake breakout, and shows you exactly where real intent shifts. It is called the CORE Scalping Model, and once you understand it, you'll never look at the charts the same way again. Let's get into it. Now, before we look at charts, you need to understand what CORE really means, because it's not just a name, it is the foundation of consistency. C stands for context, understanding the story the market is telling before you even think about entering. O is observation, watching how price reacts, not predicting what you want it to do. R is refinement, filtering that reaction into a precise, low-risk entry. And E is execution, acting with discipline and confidence when every single piece aligns. Step 1 is context. Everything starts on the 15-minute time frame. This is where you identify the market's narrative, where liquidity sits, and where price is likely to draw next. Look for your point of interest. That could be an order block, it could be a fair value gap, or clear liquidity pool above or below lows and above highs. We're not taking trades here, we're simply preparing the battlefield. Once you've marked that 15-minute zone, you know exactly where you'll want to wait for price to show its hand. Step 2 is observation. This is where patience separates traders from gamblers. When price trades into your 15-minute zone, do nothing. Just watch how it reacts. Here's what we're looking for. If price pushes into your zone but fails to close beyond it, that is the first clue. For a bullish setup, the candle that pushes into the zone but fails to close below. For a bearish setup, we need a candle that pushes up but we fail to close above. That failure to displace, that is your key. That failure is a sign of absorption. The market rejecting lower or higher prices. It is not confirmed yet, but it is your first hint that a potential shift and displacement in the opposing direction is coming. Now we move to refinement. This is where we take that reaction and convert it into a high probability entry. Drop down to the 1-minute time frame and find the exact candle that failed to close beyond your 15-minute point of interest. For a bullish setup, wait for price to break above that candle's high. For a bearish setup, we wait for price to close below that candle's low. That's the confirmation. That precise moment, intent shifts. It's where liquidity gets flipped and displacement begins. That's where refinement turns patience into opportunity. And finally, execution. We act on logic, not emotion. Once your structure and confirmation align, this is where discipline pays off. Our entry, after the 1-minute confirmation candle closes. Stop loss, just below that shift candle, and take profit, the next pool of liquidity, or a clean 2.5 reward to risk. But before you click that button, it is always recommended to double check. Is my 15-minute bias in line with this 1-minute shift? If yes, take the trade, let it play out. Execution isn't emotional. It is the reward for waiting for real confirmation. So here's the core scalping model step by step. On the 15-minute time frame, I want you to mark out your closest point of interest, whether it's an order block or a fair value gap or a pool of liquidity. But it cannot be every single order block or every single liquidity pool. Later on in the video, I'm going to show you exactly which pools of liquidities and which PD arrays we use to find our high probability setups. Now, after we mark this out, in this example, we're going to go for a swing low. After we mark out that swing low, we're going to wait for price action to trade into that level and reject it. I don't want to see a candle that closes beyond this level. I don't want to see that. What I want to see is I want to see a candle that trades past it, but then we come and we close back above it. This is what I want to see before moving on to my next step. So here we can see we do trade through this zone, but we fail to displace beyond it. We sweep liquidity, we close back above. This is my absorption candle. So what is the next step? Again, my next step is after we get this fail to displace, we drop to the 1 minute time frame. So imagine this is my 15-minute time frame. Here I have my 1 minute time frame. We are looking at this candle's high and this candle's low. This is my absorption candle. So imagine that this 1 minute time frame's high and this low corresponds to that candle's high and low. What do we need? We need a candle that closes beyond the high of that candle. That is my bullish setup. For a bearish setup, we want to wait for the market to close below the candle that failed to displace. As soon as we get that closure above, that becomes my valid entry reason. Here on NQ, I want to show you how this strategy works in a real market environment. So looking at a bullish and a bearish example so that you can come back and rewatch this video to really understand the core scalping model and how this simple 3-step strategy will help you pass your prop firm challenges. Looking at this from a 15-minute time frame perspective, what do we have? Well, first of all, we do get this massive expansion move that we caught live in our mentorship community. Looking at this, what do we get? We see we form Asia session. Asia session is from 6 p.m. to midnight. That is my Asia session. So first of all, working on time-based liquidity, I want to mark out Asia session high and I want to mark out Asia session low. This will be my POIs. Not only is it a swing point, it is also my time-based liquidity. So we are going to wait for the market to trade into that level with a 15-minute candle. And I want to wait for the market for a specific thing. I want to wait for a candlestick that fails to close beyond it. So over here, you can see that we sweep out the high, but we fail to close beyond it. And we close back below that candle. So what am I going to do? Well, here we did get that sweep. Now I want to mark out this candle's low, because as soon as we close below this candle's low on the 1 minute time frame, that will be my entry reason. Looking at the 1 minute time frame perspective, what do we have? Well, we see we sweep out these relative equal highs. That is also my Asia kill zone high. And at the moment, my 15-minute candle low is on this London low. So I'm waiting for a candle body to close below this low, which is that 15-minute candle. Playing price forward, what do we get? Well, we see we do end up sweeping higher. So now what do? Now we go back to our 15-minute time frame and we look for a candle that closes below that sweep. So looking at this, we sweep out the new high. So I need a candle to close below this low. This will be the low that I need price action to close below on my 1 minute time frame. Looking at my 1 minute again, what do we have? Well, here we have that 15-minute low. So I need, very simple, I need a candle to close below. That's it. No complicated analysis, nothing. That's already done on the 15-minute time frame. So I just need that closure below. Let's see if the market gives us that closure below. And there we go. We get that closure below. So where do we place our stop? Our stop loss goes at that 15-minute candle high, because this was my failure to displace candle high. I don't want to see price action come back to that candle. That will be where I place my stop loss. Where do I place my target? Well, remember, closest liquidity or minimum 2.5 risk to reward. But if we look at this, we have a 2.5, but below it we have got Asia low. Asia low is my purple box. That can be my target. And let's have a look. And there you go. We sweep out Asia low for a beautiful almost 4-hour trade. Now what do? We can go back to the 15-minute time frame and we can look for what? A failure to displace candle. So looking at this, we sweep out a major swing point and we sweep out time-based liquidity. We sweep it out, but not only do we sweep it out, what does price do? We fail to close below it. So we fail to displace below it. So I mark out this candle's high and I need a 1-minute candle to close above that high. Going back to my 1-minute time frame, I need a 1-minute candle to trade up and close above that 15-minute candle high. Let's see if price action gives us what we want. There we go. We close above that high. That is my entry. Again, my stop loss goes at that 15-minute candle low because I don't want to see price action trade past that low. Otherwise, my bullish idea becomes invalidated. Minimum target of 2.5R. And here we have a good example. So in the previous trade, we could take 3.74R. My next trade, even though we're targeting London high again, that will be below 2.5R. I want you to go for a minimum of 2.5R per trade. And then again, playing this trade forward, we do go into a little bit of drawdown, but the market eventually draws up to hit our take profit. And there you go, guys. In one single day, we banked almost 6R for one day using one model and one time frame. And that is the full breakdown of how I use the CORE Scalping Model. If this finally made trading click for you, then don't stop here. Because what you've seen today is just the surface. I built a free course that dives even deeper into how to apply this model step by step, from framing your daily bias to executing precision entries in live market conditions. It is completely free, and it's the first link in the description below. Go through it, take notes, and you'll see exactly why traders who actually finish that free course start trading with real clarity and consistently. Now, if you are serious about mastering this skill, trading live alongside me, a 7-figure trader, turning your charts into a career, that's where my mentorship program comes in. Inside the mentorship, we trade live every single day. I break down the market in real time, and I personally guide you through the same models I use to trade full time. You'll get direct mentorship, a structured roadmap, and access to a private community of traders who are getting funded, scaling capital, and finally winning consistently. This is the exact environment that transforms theory into results. So here's what to do next. First step, enroll in the free course at the top of the description below. This is your foundation. The second step, when you're ready to take this seriously, join the Simplified Traders Mentorship and start trading with me live every single day. Don't wait for the perfect setup in life. Take action on the one that's right in front of you. I will see you inside.